Today we're going to talk about the 7 factors that affect the premiums that you'll pay for long-term care insurance. This video is really designed for someone just kind of dipping their toe in the water. So there are 7 factors, and we'll start with age.
Yeah, the age of the person who buys long-term care insurance, that's probably the biggest driver of the cost because obviously the older you are, the biggest risk you are to needing long-term care to the insurance company because the average claim age is 85. So most people begin this kind of process researching it at say age 45 to 60. That's kind of the sweet spot with the mean being about age 55. And obviously the younger you buy this, the lower your premiums will be. And for a number of reasons, usually the younger a person is the better health they have, the less medications they're taking, the less surgeries they've had. So age is one of the biggest factor, but it's not the only factor. Drew, what's the next factor?
Well, it kind of dovetails in with age, and that is, you kind of alluded to it, health. Everyone as they age, almost inevitably, their doctor will put them on, medications to maintain this or that. But your health really factors into the premiums a lot for this at any age. So you want to buy this when you're healthy. Next to those 2 factors, it's the actual benefits that you buy.
Yeah, it's much like life insurance. I mean, with life insurance, a $500,000 policy is going to be less expensive than $1 million policy. The same principle with long-term care. You're buying a certain amount of coverage, whether it's $200,000, $300,000, $400,000. The higher the coverage, the higher the premium. And another variable of the cost is the inflation factor. Obviously, people who buy this at age 55, statistically, they're not going to touch it for 30 years, as again, going back to the average claim age of 85. So you really want your benefits growing over time to keep pace with inflation and rising healthcare costs. So when you add that inflation guard to it, that increases the cost as well.
Right, and all of those are pretty obvious, I think, to the casual observer, but there's a couple more variables that affect your premiums that you may not have thought about. One of them being the state you live in. Some of the companies charge wildly different premiums from state to state for various reasons, but where you actually live affects the premium. Now, it doesn't matter if you move later on down the road, it won't affect your premium. So if you buy this in a low-cost state, move to a higher-cost state, that's fine. But the actual state that it regulates your insurance policy will affect your premium as well.
Yeah, and I've seen this in specifically the state of Colorado. That Colorado, when people think of Colorado, a lot of times they'll think of hiking, mountains, really healthy people. And, where we live, the obesity epidemic in the South, in the southern part of the U.S., is much higher than, say, Colorado. So Colorado statistically is going to have less obese people, and, they'll pay a little bit less on insurance premiums.
Another one that kind of catches some people off guard is gender.
Right. Yeah. Gender, up until I think it was 2013, in the long-term care insurance industry, they looked at men and women. If they had the same age, same health, they pay the same premium. But back then, they started realizing that women were filing about 70% of the long-term care claims. So they moved to charge women higher rates and men less rates with some cases. And it's much like life insurance. A lot of times the women, they'll be up in arms. Oh, that's not fair. But I'll always caution them, well, life insurance men have paid higher rates for years because we die earlier. 16-year-old boys, they pay more, for their auto insurance because they're more reckless than a 16-year-old girl. So that principle was taken into effect in about 2013. And so the age of a person does affect the rates, the health, and also the gender. That's a big driver. Now, not all companies do gender-based pricing, which is what it's called, but most of them do, and most all companies will eventually move to that gender-based pricing model.
Well, and that's why if you use an independent agent who can work with all the companies, they might be able to help you find the sweet spot for your particular situation.
Yeah, because we're seeing premium differences, with this gender-based pricing model in mind. From company to company, because not all of them have done it, excess of you can say 50% with some companies on premium for the exact same benefits. just by going with a company that does not do gender-based pricing. So again, we know every company and can work with every single long-term care company out there. So we'll definitely help keep your rates down and your premiums as well.
And that's another point that we make in the article, is that the agent you work with, while the agent can't directly control your actual premiums, their advice can make a huge difference in what you end up paying for this coverage. A couple examples that come to my mind right off the bat are, if you have a complicated health situation or a non-standard health situation, a good agent's going to be able to maneuver that in a way so you don't get declined by a company and then end up not being able to get coverage at all. We see that all the time. People come to us because their agent just applied with the wrong company and probably should have known better.
Yeah, no, exactly. I spoke with this lady, and she was in Tennessee just 2 hours ago today, that her agent had already applied with company X, and she'd already filled me in on her husband's height and weight numbers. And after she told me that they'd already applied with that company, I just looked at the height weight chart for that company, and he's going to fall into a rated class, meaning his rates are going to be 25% higher than the standard rates. However, there's another company we work with where he's actually in his height weight ratio is in the select class, the lower rate class. So just by her moving from that company that just has more restrictive height and weight tables, they can save 25% on their premiums right there.
Yeah, that'll really add up over the years. And then lastly, the actual insurance company you buy from obviously affects the premium. So it's really important with this to find an agent, an independent agent, that's going to shop as many companies as they possibly can, order them from lowest premium to highest premium, not which company they like the best to which company they like the least. So you can see for apples and apples, or close to apples and apples, what a policy costs from each of the major companies.
Right. Yeah. I mean, the company you go with, you always want to be cautious of the premium you're paying to the company, and also the financial strength of the company. We've noticed over the years that sometimes the rates for the lower rated companies, they start off small, but when this company has financial woes, they have to inevitably raise the rates down the road, years down the road. So there's a balance between, the financial standing of the company and the initial premium you're paying. And obviously you want to get as high a rated company for the least amount of money as possible.
Right. So, those 7 factors, we've got them on our website. If anybody wants to kind of dig in a little deeper, we're ltctree.com. And thanks for watching today.
All right. See you later.